Hello traders, this is Marek from Trading Academy. We will carry on with the price action pyramid level 2, volatility. This will enhance your reading of the market for better entries and exits. If it is happening to you that market hits your stop loss after your entry and suddenly goes up to or down to your profit target, this is the lesson for you. Stick around. We will continue based on the knowledge we acquired from the first video about momentum and corrective movements. If you haven't seen that video, go directly there because this is the most important video I would send to everybody who is serious about the trading. So let's start with volatility. In the charts, we will work with historical volatility, and historical volatility measures a time series of past market prices. So let's go to example. We have two assets, stocks, options, doesn't matter. And the starting price at the beginning of the year is 50 USD for both. And the price at the end of the year is 70. First stock was moving with that characteristic and it hit this price exactly like that. But second one was moving, let's say, like that. And finishing at 70. The second one is more volatile because the movement was in higher range. And first one is much less volatile because the variety of trading price was less. In this video, we'll speak about three basic models of volatility. The first one is non-volatile trend, and we can spot it when the market is going in one direction, but the pullbacks, like here and here, are so small that they are not able to touch the high of the previous swing. The second one is clear volatile trend, and we can spot it when market precisely is respecting the previous swing and using this level for retest. And then third one, market is going in general in some direction, but pullbacks are so wide that the market is not respecting the swings. Then we are talk about unclear volatile trend. For this three type of movements, we have different kind of order flow, and we need to use different type of tactics. For the first one, usually breakout or small consolidation. Second one, it's really easy, it's like flip. And for the third one, I use place of the structure, liquidity. So for exercise, what would you think that this kind of movement here is? It is unvolatile trend movement because market is not able to retest these swings here, 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 here. There are no pullbacks to these levels. So this is unvolatile trend. What is behind that type of movement, which is very strong, one-sided? It is because dominant order flow. There are so many sellers there with low power of buyers. And these pullbacks doesn't have any force or power to push it to the swing. And in this type of market, we would like to short it as possible if we have tools of tactics which allows us to enter the market. Breakout strategies or some consolidation strategies for entry. So another example, what would you think that what type of volatile movement it is? We have impulsive up and respecting of this swing. So it is clear volatile trend. Here impulsive up and swing here. So we'll see how market will react on that. Respect it. So again, we have impulsive movement, but not so clear. This kind of swing here. We'll see if market will hold it. Still impulsive movement up, swing here. Until here. This is still clear volatile trend. And in this kind of volatility, it's easy to trade trend because you have really clear points where you want to open the trade. It is at the place of this swing high in this particular case. We just moved to another example chart, Euro Swiss franc, and just guess which kind of volatility it is. It is unclear volatile trend. We can see that market is pushing up, let's say, like here. Let's see what market is doing from the perspective of pullback and holding swings. So we have this zone, very important zone that market react on that. So we have support, market broke this support and now is testing. First one is clear, pullback with respecting of the swing, but second one is not clear and market went just directly here to this zone, and it is also place of liquidity right here. Market for starting rising needs more liquidity, more orders. So from perspective of order flow, it means that market is much more balanced. There are more counter traders and one side is not so much dominant. And at this type of market, using the same tactics as before, it is not really effective and you need to use bigger stop losses or different level of entry. Let's look what happened with the market after that. So market is going with this trend line and in the end it broke it. Also respecting this kind of trend line above and testing the swing. So this level is still here also. This level is still visible for traders. And in the end, market went above with moment of movement. Testing again this swing, but the market is not able to respect it clearly. So it needs to go to this level and this place of liquidity again. And still market is very balanced, so bounce again to this main place of liquidity and again moment of movement. So in this video we were talking about how to use volatility for our technical trading with connection to moment of movements for following trend. Usually beginners rely on few candle patterns like harami or single patterns like shooting star, but they do not read the context, and volatility is very important tool how to predict further movement and more precise entry level with edge. Unfortunately, I am not able to speak more about the volatility in this video, otherwise the video would be very long. But I'm going to get back to the volatility topic again because this is really powerful tool which will help you also for your exits in trades. This is a tool where you can spot that market is likely to carry on with the direction of your trade and you would like to stay longer in the trade. Also to spot reversals which is likely to happen and you would like to exit your trade in profit. Maybe in the future we also can speak more about implied volatility, which is used for option trading. Definitely subscribe our channel Trading Academy to not miss more valuable information for you, which will also help you to prevent the mistake I did in the past as a trader. And then see you in another video. Meanwhile, take the best trades.